Could Jobber truly replace QuickBooks for your business? It's a question many of you have been asking, especially as the landscape of business management software continues to evolve. For years, QuickBooks has been the undisputed heavyweight champion of accounting software, a household name for small and medium-sized businesses looking to manage their finances, track expenses, and prepare for tax season. It's robust, comprehensive, and deeply integrated into the financial fabric of countless enterprises. But then there's Jobber, a relative newcomer, at least in terms of its widespread recognition compared to QuickBooks. Jobber has been rapidly gaining traction, particularly among service-based businesses. It's designed from the ground up to streamline operations, from scheduling and dispatching to invoicing and payments. It promises to simplify the day-to-day chaos that often plagues field service companies, giving them back precious time and allowing them to focus on what they do best, serving their customers. So, when we ask if Jobber can replace QuickBooks, we're not just talking about swapping one piece of software for another. We're delving into the very core of how your business operates, how you manage your money, and ultimately how you achieve profitability and growth. This isn't a simple yes or no answer. It's a nuanced discussion about features, functionality, target audience, and the fundamental philosophical differences between these two powerful platforms. Let's start by understanding what each software does exceptionally well. QuickBooks, in its various iterations, desktop, online, self-employed, is fundamentally an accounting solution. Its strengths lie in its comprehensive general ledger, its ability to generate detailed financial reports like profit and loss statements and balance sheets, its payroll capabilities, and its deep integration with banks and other financial institutions. If your primary concern is meticulous financial record-keeping, tax compliance, and understanding your business's financial health down to the last penny, QuickBooks is your go-to. It allows you to categorize every transaction, reconcile bank accounts, manage bills, and track your assets and liabilities with a precision that's crucial for long-term financial stability. For many businesses, particularly those with complex inventory management or significant e-commerce operations, QuickBooks offers the granular control and reporting necessary to thrive. Jobber, on the other hand, approaches business management from a different angle. While it does handle invoicing and payments, its core strength lies in operational efficiency for service businesses. Imagine a company that provides lawn care, HVAC repair, plumbing, or cleaning services. Their day involves scheduling appointments, dispatching technicians, tracking job progress, managing customer relationships, and then, finally, getting paid. This is where Jobber shines. It offers intuitive scheduling tools, allowing you to drag and drop jobs onto a calendar, assign them to team members, and optimize routes. Its CRM features help you keep track of customer history, preferences, and communication. Technicians in the field can use the mobile app to view their daily schedule, get directions, take notes, upload photos, and even collect signatures. When the job is done, invoicing is a breeze, and customers can often pay directly through the app or a client portal. So, the critical distinction emerges. QuickBooks is primarily a financial management tool, and Jobber is primarily an operational management tool for service businesses with integrated financial features. Can Jobber replace QuickBooks? For some businesses, the answer is a resounding yes, but with a significant caveat. If your business is relatively small, primarily service-based, and your accounting needs are straightforward, Jobber's built-in invoicing, payment processing, and basic expense tracking might be sufficient. You might find that the operational efficiencies gained from Jobber, the improved scheduling, dispatching, and customer communication, outweigh the need for the deep accounting features of QuickBooks. For instance, a solo landscaper who only needs to send invoices, track payments, and perhaps log a few major expenses might find Jobber perfectly adequate. They can generate simple reports for their accountant at year-end. However, for most businesses, especially those that are growing, have employees, manage inventory, deal with complex tax situations, or require detailed financial forecasting, Jobber cannot fully replace QuickBooks. Why? Because Jobber isn't designed to be a comprehensive accounting solution. It lacks the general ledger, the robust reporting capabilities like balance sheets or statements of cash flow, the deep payroll functionality, and the advanced tax preparation features that are hallmarks of QuickBooks. While Jobber can track income and some expenses, it doesn't provide the holistic financial picture that QuickBooks does. The more common and often more effective approach is integration. This is where the true power lies for many service businesses. Jobber seamlessly integrates with QuickBooks Online. This means you can manage your day-to-day operations, scheduling, dispatching, job tracking, invoicing within Jobber, and then automatically sync that financial data over to QuickBooks for your comprehensive accounting needs. Think of it this way. Jobber handles the front end of your service business, getting the work done, managing your crew, and getting paid. QuickBooks handles the back end, ensuring your books are accurate, your taxes are prepared, and you have a clear understanding of your financial performance. This integration allows you to leverage the best of both worlds. Your field technicians use Jobber to make their lives easier, and your bookkeeper or accountant uses QuickBooks to ensure financial integrity. This symbiotic relationship provides a much more robust solution than trying to force one software to do the job of the other. Consider the scenario of a growing plumbing company. They have multiple technicians, manage inventory of parts, and need to track profitability by job. Jobber would be invaluable for scheduling emergency calls, dispatching the right technician, and ensuring they have the necessary parts on their truck. Once the job is complete, the invoice is generated in Jobber and synced to QuickBooks. In QuickBooks, the company can then track the cost of parts, reconcile bank statements, run payroll for their employees, and generate detailed profit and loss statements to understand which services are most profitable. Trying to do all of that solely within Jobber would be a struggle, if not impossible. Furthermore, compliance and audit readiness are critical for any serious business. QuickBooks is built with these considerations in mind, providing audit trails and detailed transaction histories that are essential for financial scrutiny. While Jobber provides records of services rendered and payments received, it doesn't offer the same depth of financial documentation that a dedicated accounting platform does. With that said, thanks for watching, and until next time.